Yeah, thanks so much. I'll start with you today. Weakness in that Aussie dollar again today, but helping stocks. Are there any standouts?
The US dollar strength that we've seen and the Aussie dollar weakness is generally a good thing, especially for those companies making earnings offshore. So we have continued to see a positive effect on those stocks, which do make a lot of their earnings offshore. Stocks like QBE Insurance, as well as CSL, Cochlear, Computershare, News Corporation, Brambles are all stocks which actually outperformed the market today. Now, part of the strength in the US dollar that we've seen has been the better than expected retail sales that we did see out of the US last night, and really a lot of speculation going on in the market on when this pullback for quantitative easing is going to occur rather than if it's going to occur. And at the moment we know that the US Federal Reserve is buying $85 billion worth of bonds per month, so that's adding to the Aussie dollar weakness. We have a look at how the Aussie dollar impacts on stocks. It impacts on stocks like Orica, which in the past has indicated for every 1 cent move that we see in terms of the Aussie dollar, it makes a $3 million impact in terms of earnings. And of course the miners, Woodside Petroleum sells its products in US dollar terms, so those miners have a positive impact as well. In fact, UBS picking their top three for a positive impact from that weaker Aussie dollar, saying that Western Areas, Alumina, as well as Perilla Resources are their top three to benefit from a leverage to a 5 cent move in the Aussie dollar. In terms of healthcare stocks, so it's a little bit mixed. We have seen ResMed doing well this week, but if we have a look at ResMed, it's more exposed to the Singapore dollar with about 30% of its costs in Singapore dollar terms. And if we have a look at CSL, we know that it's more exposed to the Swiss franc than the US dollar, but certainly that weaker Aussie dollar having a positive impact on stocks. And if you think about stock market performance around the globe, weaker currencies generally have a positive impact on share market performances. If we have a look at the weaker US currency, it's been fantastic for US company earnings and US stocks. And if we have a look at the weaker yen, well, you only have to see how Japanese stocks have absolutely soared over the last couple of months.
Services space now, Julia, profit warnings today, some upgrades, some downgrades, but let's start with Chandler McLeod.
We have seen a downgrade, and I guess not a huge surprise here, given that this is a company that's in the mining services area and looks at recruitment. So the downturn that we have seen in mining companies, well, that's impacted on the demand for contractors and also the number of hours worked. So we have seen a profit downgrade come through. Now, when we do hear profit downgrades in this space, we know that we can probably expect a pretty sharp stock price reaction, and we've seen that today, down by 12.3%. But as you mentioned, Ingrid, that comes amidst a pretty good performance by Macmahon today. Macmahon up by 25.7%. Now, Macmahon, I guess we've seen a restructure in its business. It's sold off the problem side of its business, and that's the construction business, to Leighton's, which leaves it with the mining side of things. And the mining side of things is tracking pretty well. They've got about $3.5 billion work in hand, another $2.5 billion in terms of tender in the tender pipeline. So that's looking good. And also in terms of revenue, they're expecting to hit $1.4 billion for the FY14 financial year. So Macmahon having a good day, and unfortunately Chandler McLeod not having a good one.
Any key stocks we should be watching?
Well, last year, you know, when this budget announcement was coming out, we were looking at things like the mining resource rent tax, and it was really about miners and small companies last year. This year, I think the key areas to watch are healthcare, infrastructure, as well as superannuation. In terms of the largest part of spend in the budget, it's still social security and welfare, and I think this is one to watch because we're seeing more Australians going into retirement, and we're going to see that those aged pension costs continue to rise. But that doesn't really have a direct impact in terms of equities and the share market. So really the biggest area we're watching is healthcare. We have a look at healthcare companies. We're looking at Medicare as well as the pharmaceutical benefits scheme, and like 70 to 80% of revenue of some of the domestic Australian pharmaceutical companies are exposed to government spending. So we're watching stocks like Sonic Healthcare, Australian Pharmaceutical, Ramsay Healthcare, as well as Primary Healthcare. In terms of infrastructure, we're expecting to see a big spend as well. So we're expecting to see Leighton's, as well as perhaps stocks like Transurban, which owns toll roads, and industrial stocks being impacted. But of course, the market's also watching the estimates coming out We're expecting to see a deficit of $17 billion and confirmation that we are going to see continue to see fiscal tightening, and of course that impacts in terms of expectations around Reserve Bank, the RBA rate cuts, and they're expected to continue. The upside of that is perhaps we could see house prices rise quicker than expected, and perhaps there could be a wealth effect, and we might see Australians become less conservative in terms of spending. After the global financial crisis, we have seen discretionary spending being pulled back quite substantially. But if we do see more RBA rate cuts, then perhaps we could see Australians starting to spend a bit more.
All right.